there, welcome back to this week's episode of Finance Fridays. I'm your host, Lucas Bolahood with the Bolahood Group at Coldwell Banker RMR Real Estate, and I'm rejoined by my trusted lending specialist, Alexandra Jobb, with the Legacy Lending team. It's been some time since we got together here, Alex. What's new and exciting?
Yeah, we sort of, I think we skipped a week, and now we're 2 weeks from Christmas. Can't believe that.
Yeah.
Less than 2 weeks from Christmas. Wild. Um, yeah, I just wanted to talk about sort of like this busyness of the season. It's not so much just work, it's life, right? The social season that we're in, like the gift buying and the meal planning and like the work parties, everything. You feel the same.
Oh, absolutely. It's been pretty busy here. And this afternoon, we've got the Christmas concert at my son's school. So we get to go watch him up on stage and do his thing. That's what it's all about right now, right? It's the holidays. It's a season of giving, and just so
Yes.
grateful for this time of year as well. It's a magical time, as they say.
It is the giving and the magic. I love that.
Yeah.
And speaking of giving, I want to say thank you to you and your household. As you know, our team at Legacy Lending, we are giving back this year to the Simcoe Settlement Hall, and they do the food drive and toy drive. So we're contributing a lot of food. We're going to be going over there tomorrow and dropping off a load to them. And I was a volunteer there last year where we were getting the bins together, baskets together, and it was such a dramatic number that they were down in donations and then the increase of people that were in need. So I'm sure this year is just the same or even more. So thank you so much for contributing to that.
Well, I think it's a great cause, and obviously, I love the community that I live and work in, and I aspire to continue to give back. So anything we can do like that, especially your team taking on the initiative to run this is, I think, is fantastic. So I think the bigger thanks is to you guys, the Jobbs, to make it all happen. But
Thanks so much.
it's this people do need some help, and anything we can do to contribute to that
Of course.
is definitely necessary. So how can people donate? Is that something that we can share on here today?
Yeah, well, we will probably be wrapped up by then. I mean, if they want to make donations directly down to the Simcoe Settlement Hall themselves, it is on Simcoe Street here in Oshawa. We were collecting donations by, going to people's homes and collecting front porch pickups.
Oh, nice.
And so if there is anyone that needs assistance with that, just message and we can collect on your behalf. But we will probably be wrapped up by then because we're doing our big drop off tomorrow.
Gotcha. Well, in terms of the real estate world here, we've seen lots of activity happening here in November from a relative perspective of good news going on with interest rates. The market is slowing, but you kind of expect that to happen in November as we get towards the holidays. So, what I guess what I want to just touch on first here is sort of our market update as the stats from November came out a couple of days ago, and it actually marked a low point in the year for the average sale price and for transactions overall.
Oh, wow.
Where our average price dropped from 931 in October down to 883, and our sales dropped a little bit as well, down to 540. But year over year, it's actually not too bad if you think about it. Last year, this time, our prices dropped, or were $11,000 under where we were an average sale price last year at 894, and transactions are only down a total of 24 deals altogether. It's worked out to be about 4%. But overall, Durham region's pushing towards a more balanced market. We were at 3 months of inventory in October. We're down to 2.7. I think a lot of that is because we saw fewer new listings hit the market, a little over 1,200 hit the market this month, and we started out December with only 1,453 listings compared to the active listings at the start of November at 1,770. So there's a little bit less inventory in the market, which is somewhat expected if people are getting ready for the holidays and they wanted to sell their home, but now because we're in that holiday season, as you talked about, those social gathering activities are happening with our families, so they take the home off the market so they can do those things, and they'll probably be back up in January, if they haven't sold. So that's what I would expect from, as the calendar turns over. But places like, Whitby, Clarington, and Oshawa are still in a seller's market. They're under 3 months of inventory, and other communities are in that 3 to 5 months of inventory range. So it's more of a balanced or even a weak buyer's market in some of those cases. So, but overall, in terms of, for every 10 homes that are listed for sale, only about 4 are going to sell in a month. And so that works out to maybe about 1 a week, right? So if there's 10 for sale in the neighborhood, only one of them is going to move. And that relationship between price and condition that I speak about so much is very important these days, as buyers have a little bit less to work with. But with that being said, the Bank of Canada did hold rates on, I think it was December 6th. They held their policy rate at 5%. And it looks like the variable and fixed rates might be trending in a positive direction for consumers. What have you learned lately on how that's impacted your activity?
Yeah, just to echo yours, I mean, in regards to activity, it is a little bit slower with it being December and this holiday season. It's always like that every year, right? But I do think that it's going to be very busy coming into 2024. As you've talked about, we've got all these people coming up for renewal, and you've got people been on the sidelines wanting to make a move. And with Bank of Canada holding rates, we have seen our lenders bring interest rates down in the fixed pricing. So that has been great news. Just a funny note, I read this morning a couple of things that trying to bring inflation down to like the 2% is starting to feel like trying to lose weight over the holidays. That's relatable. Very
Oh yeah, I
relatable.
think we can all relate to that.
This but this cycle of this policy rate shock was like the largest one since 1989. So I mean, one that we're going to look back on and remember. But I think 2024 is going to be promising with rates trending downwards. So just in the last week alone, for uninsured mortgage options, they've changed like 10 to 25 basis points, and for insured pricing, we've seen a swing like 5 to 15 basis points. So that just helps our clients with their confidence and buying power. And when I say basis points, I wanted to make a note because sometimes that's like speaking over people's head. If you're in the industry, but really it's just a percentage point. Okay. So if we talk about a 25 basis point swing, that's literally like from 6.25 to 6%. That would be the difference when we say basis points.
A quarter point.
Yeah.
So 10 basis points is like 0.1 of a whole
That's right.
percent. So
yeah.
for people
So we have seen movement, and that trending downward. That it's been great. I love getting those emails. Rate decrease, rate decrease. So
yeah, it's certainly a good sign. And I think that's going to keep people in the market and those, longer as well as the calendar does turn. A lot of people have been benefiting from, being locked into this sub 2% interest rate that was available back in 2020, 2021 as, the pandemic,
yes.
period of our history here took hold on the economy. And I think that means that over the next decade, there's going to be a lot of homeowners, renewing, or the next half decade, a lot of homeowners renewing their mortgages, right? It's projected that 31% of homeowners in Canada are going to be renewing their mortgage by the end of 2025 and getting into 26. So, an optimistic outlook, from that point, from what we've heard from some experts between RBC and CIBC and some of those larger banks that, the economists that share their insight with us, is that it looks like rates might be back into the 4.5% range by the end of next year. So, that's, but with that, if going from a sub 2% rate to a 4 or 4.5,
it's still a big change, right?
You're going to see your payment double. So that's going to be a big shock for people, certainly, right?
Yeah. So it's hard because it's this game of, do you lock in at the lowest rate, which is going to be your 5-year fixed term right now. Okay. But knowing that rates are coming down, it's such a tease to think I don't want to be locked in for 5 years if rates will drop in 2024, 2025. So I have to say that there is a lot of conversation about the variable, and whether that's the solution for this motion that we're going in, right? So because let's think if prime is 7.2% and we dropped a full percent down to 6.2 prime rate, and you had a minus, then you're in like the low fives, right? You're at 5.2, could be 5.2%, and that's just the next year, not to mention what's to come ahead in 2025. So I have to say that there is some focus on the variable rate. It's not for everyone. Some people feel very uncomfortable with, given what's gone on in the last couple of years. But that's a discussion to have when you're talking about your mortgage options.
Yeah, absolutely. So this is a little bit premature for this sort of debate, but what are your early expectations for 2024?
Well, we're expecting Bank of Canada to be cutting the policy rate by the middle of next year and taking it down a full percentage by the end of the year for 2024. So that's great. And I think our fixed pricing will will be in and around that as well. But the thing is that once we come down from the peak, it's where do we land? Or we're not going to be back in the 2% range. So it's like, forget about that 2% mortgage rate, hang on to it until the end if you can. And then let's look at everything, all of your options, whether that's unfortunately stretching out your amortization just to help with cash flow, or maybe you need to consolidate some debts. In either way, I think a lot of people are going to need support in 2024, and that's what we're here for.
Yeah, absolutely. I think like reading some of the tea leaves that I've sort of been reading about and seeing going on between the US and Canadian economies, our bond rates in Canada have been dropping over the last number of weeks, which is a good sign, probably why we've seen some of our rate changes, as you mentioned. But we might actually need the US economy to slow down a little bit, and for ours, before ours will really bounce back, and sort of, get inflation back under control. Unemployment has been on the rise a little bit. I haven't seen the inflation numbers for November yet, but and I imagine they'll be available for us soon. But affordability may not really improve until mid to late next year. So I think once that happens, overall, that's going to create a frenzy for those trying to buy real estate here in Canada. Like, developers in the last number of years haven't been able to build them fast enough. They've been canceling projects, which we've heard a lot about. We've heard, buyers of pre-construction walking away from several $100,000s in deposits because they no longer qualify for the financing to
that's scary.
To close on the transaction. So, it's the costs are too high for builders, and it's making it a challenge. Immigration has been happening at such a fast rate that, they can't relieve the existing demand for housing, again, because builders can't build them fast enough. So aspiring buyers that have been sitting on the fence for a while are, going to want to jump back into the market once rates start to improve. And that's going to, couple that with immigration and more people looking for a place to live. It's going to make it much harder, and prices are going to start to go up in a hurry, and we'll be back into that multi-offer environment that we've kind of got conditioned for in the last couple of years. And that's, that
I could see that replaying.
Yeah, I think that we're going to see that happen again. But right now there's an opportunity for people to buy real estate at what would be like a discounted price relative to what is likely going to happen, next year. And I can use any cliche you want. You date the rate, you marry the house. Price and condition need not apply. Real estate right now is in high supply. Yeah, maybe it's a Christmas jingle I've sort of come up with in my head that's not even relevant, or not even a real cliche that's out there. But anyway, like, I think if you can manage a higher payment right now in the short term, there's an opportunity to buy the property at a reduced price and then refinance it later, or just, in 12 months or however, you sell it when the market has responded, and you've got an opportunity to make some money there. Like, the first rule I learned in real estate, Alex, was you make your money on the buy, and that means you buy low and you sell high, as simple as it is. And that's something that I think people should be thinking about. If you can make the money, the payment work right now, even though it's might feel like it's a challenge to manage, like an investment property, for example. You talk about the Toronto condo market, and it's a strong buyer's market there right now. Is it, I think, 75% or something like that of condos for sale in Toronto are either vacant or tenanted, which means investors are cashing out, or they're trying to get out because their payments have increased so much. So because there's so much inventory, prices are going to continue to come down for that market. And there's going to be an opportunity for people who've been trying to get in, to get their foot in the door,
to jump in there, and then make it your long-term wealth goal, right? It doesn't need to be a flip. You don't need to make money on it in 1 year. You don't need to make money on it in 2 years. Look at the long term, and giving you a place, giving you an investment vehicle in real estate, and look at that bigger picture, the 20-year window, right?
Yeah, and that's one of the things that we always hear about too, right? Is you buy real estate and wait, right? And that's where there's going to be an opportunity right now. Like, really, if we look at the different generations and what's going on in the Canadian economy and the world overall, we're going through the biggest wealth transfer in the history of humans, right? The baby boomer generation is, they're starting to retire or whatnot, or moving out of their larger homes. They've got lots of equity, and that equities, or that money is going to move on to the next generation. right? And it's going to, whether it's going to be handed down or what have you. So there's a lot of that that's going to be happening right now. You know, if a family's looking to downsize, they can take some of that money and help their children buy a home with it, right? There's that opportunity out there right now, you know, for those who are having trouble getting into the market. I think there's some like systemic challenges or problems with that, with our system right now, where like the educational system is getting young people at 17, 18 years old into post-secondary school, where they accumulate some student debt, and then they, you know, they come out of that in their early 20s and try and get a job and spend their 20s trying to pay off all that student debt. And it makes it hard to save to buy a home by the time you're in your 30s and want to maybe start a family or doing anything like that. You don't have that opportunity in that time to save to buy a house. So, you know, I think we're going to see some more of that type of activity amongst, you know, families with that wealth transfer happening here over the course of time. So that's something I see as an opportunity for people, you know, for that first time buyer as well, to get into the market. No,
absolutely. Great recap.
Yeah, well, there's been a lot going on.
You've
We haven't
got
had
a
a
lot.
chance to talk, so I think this is just me getting a lot of my thoughts and things that have been accumulating here off my chest today. This feels good.
You've got it all.
You know, but like, as we kind of wrap up here, what are you looking forward to as we get as we finish up December 2023?
You know what? Just winding down some of my files with work and like sinking into my family time at home. The kids are going to be off school, a little bit of time at the cottage. If we get some snow, some time on the ski hill. So I'm really looking forward to the time with my family.
Yeah, and it's a fun time of year, and get a chance to maybe unplug a little bit, take a bit of a break. I think that's something I'm looking forward to as well in the meantime. But well, that's great. Well, I think we'll leave it here for today. Alex, thanks so much for joining me again. And for those of you, if you have any questions about where to donate to the Simcoe Settlement Hall with the food drive there, or any questions about renewing your mortgage or what's happening in your neighborhood, feel free to reach out with Alex and to Alex and I with any questions you may have, and you'll find all of our contact information at the end of the video here. So feel free to like and subscribe, and we'll be with you again soon. So thanks so much, and bye for now.
Thanks, Luke.